Alright traders, this morning was pretty interesting, the price action. I thought the pound would be sold pretty heavily given the downgrade and the lack of enthusiasm we got from Europeans in regard to May's speech, which was lacking in detail, I suppose, but still, that's sometimes it's a delayed reaction, and you're probably getting this right now. So I was talking to a few traders in the Asian session about this rally when it was about here, and I was like, oh well, Europe can still sell this. This is you have a little bit of pound yen support going on, a little bit of euro yen support going on, and the market could easily roll over and focus on the negatives, which was multiple in every currency. You got every currency almost in play via political problems at the moment. And so the easiest way to be viewing this market is, while stocks are strong, I suspect the easiest trade out there is long dollar yen or long dollar Swiss. Now this is as good an opportunity we've had for the US dollar to regain some strength and to set a new upper limit in what I suspect will be range trading for the rest of the year. I do sort of believe that the bottom's in for the US dollar at the moment, and that the Fed opening up the door to December rate hikes provides constant support as we head closer to that, while the ECB seems hell-bent on delaying or playing down taper speeds, and that's it's taking the wind out of the euro, which is starting to show toppish signs on the charts. He's starting to get lower highs in now, and that 120 level is starting to look pretty much capped. It'd be a big reversal here to finally go up and break. Much more likely that we go down and test some of the bigger levels after this sort of consolidation. If we can bounce off 117 or closer to 116.20, the key level, then yeah, you can talk about resuming the uptrend in the euro. And there's no reason not to be buying euros on dips. We might just go into a new relatively stable 117, 120 range until things get a little bit clearer as to ECB's taper timeline. All the yields in Germany start to rise again. When you get that, then that's a big support for the euro to go up. But you haven't got that just yet. What do you have? You have a US dollar that has reasons to be gaining against nearly everything. It's been beaten down for so long. It's got a bit of good news. There's talk about taxes. There is a bit of concern about this healthcare bill though, and maybe without the healthcare bill passing, you can't really get a tax plan passed. That the healthcare bill is probably going to be voted on Wednesday from what I see. That might stall the US dollar rally or even create some downside in stock markets, so you got to be a little bit worried about that, because that's all obviously negative for dollar yen. But that's the story, right? While stocks are remaining strong and supported on dips, then you buy dollar yen on dips, and that should work out okay. The fear that maybe euro yen and pound yen could drag down the dollar yen is pretty real, because both of these are enjoying pretty solid gains, especially the pound yen, which is looking a little toppy. And if they do get enough selling pressure coming through on these two big crosses, then yeah, dollar yen can be a little bit under pressure as well. But that's where you pick your levels where you're buying dollar yen. So dollar yen here is okay. Dollar yen 111.50 or 111, 110.80 is super solid in terms of this potential resumption or just basing in the US dollar. So expect two-way action, right? But if you pick your levels right, you should be pretty good in terms of risk reward. So this is the chart which I think is most important here. This is the dollar index. If we can get back above 92.50, a lot more traders will start to think that the US dollar is in the bottom's in, because we've had an almighty sell-off here, right? This is nothing. To get back to 94 is nothing. 95 is very achievable. Get out of there. And so it's not like I'm going super US dollar bullish, just looking for an equilibrium to work out in the market. And with risk on, then the way I prefer it is to buy dollar yen. You can play short euro as well, or short pound. Short pound seems much more dangerous than short euro. Pound should find support towards 134, 133, given the backdrop of Bank of England raising rates at some point. But the euro, yeah, that it hasn't had a clean out yet. So basically the buyers have been immune to stop losses for 6 months, and that just doesn't work out usually for the whole run. So a good little clean out is not necessary, but definitely healthy for an uptrend. And even for the dollar index, a good retracement, even if you believe the US dollar's on the going to be going lower and lower and lower as Trump presidency continues, you still have to be patient in terms of the levels that you get into. So let the market push back. Commodity currencies, pretty much all of them are under pressure. The one which has sort of escaped that at the moment is the Aussie dollar. Now, you remember the Aussie dollar when we were speaking on Thursday was rotten. It was getting reversed and sharply sold, and it looked like death had come to the Aussie dollar last week, but it stabilized a little bit, and it's probably waiting for a bit more of a catalyst to push lower than this, but it has good solid support as well. It doesn't really mean that we're not buying the Aussie dollar. We just we haven't really seen a retest of that key level down at 77.50, which was that support level that broke. And so if the US dollar does have a multi-week rally, for whatever reason, tax plans, blah blah blah, then you do see that pushback. And this is, like I said, there's just too many pairs seemingly not lining up against the US dollar right now. The Kiwi dollar's under pressure because they've failed to get enough votes to form a government without making negotiations with the far right party, which has emerged, the New Zealand First, I believe it's called. And that could take a couple of weeks there, so that's constant backdrop. You do have also the most feared jawboners in the game coming up with the RBNZ. Those guys know, have been very successful in the past of talking down the Kiwi. So that's on Thursday morning, Wednesday night, depending on where you are. And then you have the dollar CAD, which is starting to succumb to. Even though the oil's so strong, dollar CAD's just getting constantly jawboned up higher, and also you're getting some of the Bank of Canada members are a bit worried about the speed of the Canadian dollar's strength and the impact it will have on the economy. That sets the course for a pause in the rate hike cycle. Opens the door anyway, and just opening the door takes a little bit of steam out of the Canadian dollar. So literally everything, including gold's still under 1300. Everything is sort of showing a little bit signs of a bit more US dollar strength here. Apart from oil, which is enjoying some OPEC headlines, but that's actually nice levels here. This is going up towards, potentially going to break into that 51 to 55 range again. Which probably means that you don't really want to be buying dollar CAD of all the ways of playing US dollar strength. But at the moment, I'm just looking at dollar yen as the main way of playing it. You can buy it here at 112. That's fine, I suspect. But you might get a deeper pullback if you do get a bit of a more sudden jerk down in the pound and the euro. Now, but yeah, basically the main thing is that you should be buying dollar yen while stocks are strong. And US yields are well supported. How are the US yields going? US yields are not too bad, a little bit dipping, but you've seen the nice rally in the past couple of weeks. A little bit of a dip here, but nothing crazy just yet. This is actually, if it does fall down here though towards 2.2, that puts the dollar yen back around about 111.50. So that's that's why you can buy a little bit here at 112, but you can buy it a little bit more aggressively lower, as long as stocks are holding up. And that's the main trade I'll be looking at doing. So I'll buy a little bit of dollar yen here, but I do want to buy a little bit lower. So the target is at 114 level, which is going to be pretty hard to get past. So I'll be probably taking profit there, and that would be with the US dollar enjoying pretty good gains for a week or 2 weeks to get up to that point. Also, obviously, next week's a huge week, right? First week of the month, you always get all that data, that chunky data that comes out and concludes on Friday with the NFP. So if you're looking for ways in which the US dollar can rebound, next week's definitely providing it. But this week, it's mostly about the political issues in UK with the Brexit stalling and the euro under pressure as Merkel has failed to secure outright majority, and you know, lost a fair bit of votes to the extreme right. So the you know, this is just opening the door, given that the market stalled here for that move lower. Which, if that happens, if the euro falls, it's very hard for US dollar not to be strong. All right, so I mean, it's not conviction trades; it's just probabilistic trades, right? You just go with the little bit of the flow at the moment, rather than try to guess what's about to happen next, sort of thing. And so the one with the least amount of worry at the moment is the yen. Now, why is the yen strong today? A snap election was called by Abe, and a new week earlier in Asia. Why was it weak? We had the snap election called by Abe, and you had the $2 trillion economic plan. Now, snap election was, you know, we knew about that going over the weekend, so that was nothing. But the 2 trillion yen economic stimulus package is probably there to get votes, and that's more Abenomics, right? And you've got the BOJ coming out, you know, suggesting that they're nowhere near getting their 2% target. So for the foreseeable future, the Bank of Japan's, you know, printing money and keeping rates low. So in that backdrop, you've got a bank like the Central Bank of America, the Fed, raising rates in December, or talking about potentially raising rates in December. You got the yields rebounding, you got stocks strong, dollar yen should squeeze higher in that environment. Whether you buy euro yen and pound yen on the dip is up to you. Both of those, all those trades make sense too, but you just have to wait for the right sort of pullback there, because both are pretty overdone, and if their majors are under pressure, you might see, you know, sharper falls than expected. It's much easier to buy pound yen when the pound is on the rally at the same time the dollar yen's on the rally, which had been the case for most of most of September in the last 2 weeks. Yeah, I mean, half the reason we're in dollar yen longs on the dips here, Gats, is because of the snap election and the way that the market will respond to that. You saw the Nikkei quite excited by it. It was one leading the dollar yen higher this morning. Now we just have to see that next leg up, and dollar yen will follow it. I mean, the guys who are selling dollar yen are looking for a stock market correction or some sort of weird US dollar weakness to come back in, maybe yields to drop. And despite, you know, we're in the middle of nowhere, right? 112, we're not really at that 114 level. So if I was a seller of dollar yen, I'd be waiting for sure. And yeah, who's more worried now, the sellers of dollar yen or the buyers? You know, obviously the sellers are, you know, worried at the moment. Same as the gold. If you bought gold above 1300, are you happy or are you sad? You want North Korea to start shooting bombs. Same as if you short dollar yen. And you know, pound yen, if it drops far enough and the pound gets back to those 133, 134 levels, it's probably going to be well supported, right? So you can't really count on pound yen to be that catalyst. The euro yen's a little bit more tricky, but you know, it's still it's been well supported on dips anyway. So towards that 130, 132, 131, 50-ish level. Should be well supported as well. That's still a fair few pips away, right? That's still 150 pips. So you can still get some drops in the euro and dollar yen sideways or dollar yen down a little to get there. But yeah, keep an eye on this dollar index, guys, because this will make the headlines, right? You know, maybe even buying dollar index is a better way to go. We tried that a couple of times. Hasn't really been an easy one to play, but does seem to have that feel about it that it is going on. You know, you can imagine the stops, trailing stops for this whole sell-off, right? You know, you got to have it. I mean, trailing stops sometimes can get the market moving back up, but it's not just trailing stops. It's just the view that the market's, you know, in, and then it's time to take profit if you've been short dollar index. That's the thing which sort of looks like trailing stops, but it's more of a roll through higher. And so you don't even need news to keep the market moving up. You just need to break a couple of levels. And same with the euro. You don't need further news here to get the market to keep dropping. You just need to break a couple of levels, and the technicals will do the damage for you. But to be clear, these levels haven't broken yet. This is just, obviously we try to make money, right? So we try to anticipate the next move. So these levels still haven't broken yet, and these levels do line up with what the euro will be. If it breaks 92.50, then the euro is breaking that previous low, 108.60.70. But yeah, to me it looks like it's happening. So we'll see tomorrow, right? You'll be like, oh, Tony, market was not ready for that US dollar rally yet. You got a little bit excited. This is one of my favorite reports. I haven't seen it for a while. So it's technicals, but it's like, what's the most important things moving? Get to see some certain different pairs in context. It's not just looking at FX, but everything. So pound was super strong last week. Yeah, we knew that. And the week before. But it's easing back at the moment, running out of steam. Copper's been weak and weak. That's bad for Australian dollar. If that continues to happen. I'm getting a little bit of give back in the bonds there. Aussie dollar, really, I mean, Jesus, that's hard to trade. This was drawn before the open today. Just always check the date. This is Sunday. I should not trace further than 117. Okay, 15. That's the level. Pullback should hold by 133.70. I mean, you don't disregard the head, technical analyst at Goldman Sachs, guys, right? You don't get there by chance. So, it's not like I trade technically, right? But I definitely don't ignore technicals. I mean, to me, the most interesting thing is what the stock market does if healthcare fails, and what the reaction is to the 20% tax plan, even tonight, because it was leaked over the weekend that that's the new corporate tax target. If we see the market endorse it, that's fine. If you see heavy selling coming through after if it looks like the healthcare bill can't pass, because it leads on to the fact that maybe the tax plan can't pass, then yeah, you got a little bit of issues with how the market's going to react, and I don't think that means a euro rally, but it definitely might be dollar yen down, just a little bit anyway. But it's been very hard to sell stocks, on any sort of headline and get a follow through sell off. So I doubt the healthcare bill not passing is going to be the straw that breaks the camel's back, but you never know. I mean, every time there's selling is a potential time for the correction that the stock market has not had. So keep an open mind on that. I'm coming across telling you to buy dollar yen on dips. That can change pretty quickly. That can definitely change pretty quickly, because we haven't had that nice 5-10% correction in the Dow at all. So these dips are not very big. So a dip back towards 21 or 20,000 doesn't even change the uptrend, right? It's just sort of correction you need to have. But what is going to do it? Well, hasn't been North Korea yet. Hasn't been any scandals in the White House yet. Hasn't been, Trump's been. This is another reason why you probably can't worry about North Korea this week. Trump's got so many things to be worried about in America that he's going to be very busy. He probably can't go get distracted, and he was over the weekend, but he probably can't start asking for huge sanctions on North Korea, yada yada, or even start a little program against Iran, which at some point's coming, obviously, because you saw that UN speech where he was so aggressive, and then Iran tested a missile over the weekend. So yeah, of course, you know, they're next. You know, they're after North Korea. After he's sort of, if he gets sidetracked, maybe next week or the week after, then you know, Iran's in the crosshairs. All right, let's have a look at some charts here. So this is the key one that I'm looking at too, not just because of the break above, but the you know, what the potential next move is. If we can get above 2.3, then dollar yen's well on its way to 114. And there are ways which we can go higher than 114, guys. It's not like 114 is the, that's where I'm going to get cautious, just because of, you know, respect the previous highs in dollar yen. But by no means am I, you know, do I not see a way in which dollar yen can really, you know, go a lot higher, especially if the election turns into some sort of who can outspend each other, and you know how aggressive they get in terms of the stimulus package. You know, this is Abe we're talking about. He's like the king of stimulus packages. This is what happened first, right? If you can't remember, this is when Abe got in, bang, 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 bang. You know, this is a 1,600 point rally. So now, you know, you have another election, comes out with a new stimulus plan. Perhaps the market's ready for, you know, resumption here of his major sort of stimulus package. You know, sort of feeling that they're going to keep printing money, debasing their currency until they get inflation. Is, you know, I tell you what, you know, back when we're at 118, there was lots of views out there that that we're going to no, sorry, that was the Trump rally. Let's go back in time. This was the Abe rally, bigger. There was lots of views that dollar yen was going to 140, 150, and it makes a lot of sense given their financial position. So you know, all you need is to get the dollar yen to start breaking some of these previous highs, right? And then you get the super bulls coming back out in the dollar yen case. And those guys, I mean, if you're looking for a currency to pick on, it's the yen, right? And so I'm definitely not against that. And how do the yields go? I mean, I know it's hard to envisage what's going on in the bond market because we don't get exposure to it. But everything from what I've read is that this is once in a lifetime sort of low yields, and the yields going back up can get really disorderly. And what have they done in the US? They've just started getting rid of their QE, balance sheet reductions, right? And they're still raising rates. And Japan's not going to be raising rates for the next couple of years, right? And they're still printing money. What's going on in Europe? You know, they're just starting to end QE, and maybe 2019 they're raising rates. So you've got this whole Japan being left behind again, and that's really where I see the everyone picking on the yen for big 1,000, 2,000 point rallies. It's not that crazy, especially pound yen back to 170, 180 in, you know, next year. But let's not get excited just yet. I know you guys, if you've been watching me or know me for the last couple of years, you know I'm one of the super bulls on dollar yen. And this has been aggravating, right? This price action has been extremely aggravating because it just shows glimmers of the previous strength and then fades out, and you know, something happens and the US yields just don't go, and so the US yields have been struggling to sustain strength. You know, maybe this time's different. It does look like the bottom's in for the US yields, testing 2 like that, right? If you can't see this chart, but when Trump came into power, you know, it jumped up from 1.8, so it was a big move higher. Oh, here we go. Here's the chart. We've gone to the chart we wanted to see. So that pullback is normal. Now potentially we've resuming the uptrend. So it's actually pretty formative in the next 2 weeks about how the US dollar performs and how dollar yen performs. If at the end of the next 2 weeks we don't have dollar yen, you know, towards 114, then I'm probably going to have to sort of get out of that trade idea, or get out of that mindset to be so aggressive on dollar yen. So this is a multi-month chart here. This is has it broken above the wedge or not? What are we on? For 5 years. So very similar sort of price action, right? Starting to push up. 30 years is still holding. So it's not all clear. Okay, but this is the way that euro yen rallies. This is the way that the euro can break 120, 125. There could be a new scenario that we haven't seen in the markets for a very long time, where the euro and the US dollar is strong. And it does make sense. US dollar, pound and euro can be strong as well. And perhaps we do get the commodity currencies in the yen and the Swiss underperforming. That we talked about that previously, about a couple of months ago. We talked about the yield squeeze that could happen in that scenario. So the Aussie dollar and the Kiwi dollar have enjoyed relative support because of their high yielding nature. But as that's taken away, because everyone else is raising rates first, then it leaves them vulnerable to a sort of pullback that you've never seen, or haven't seen in the last 10 years anyway, which is just, you know, the interest rate is the key thing in currencies, what moves currencies. The difference between the interest rates. And you see very clear here, this is the pound, you know, this is leading the pound high too. So this is UK yields. So, you know, what you're sort of seeing here is that the charts for the yields, you know, everywhere here are supporting Japan, everything against the yen crosses, right? And it's very hard to change that, very hard to slow that. Now remember, the Japanese actually targeting their 10-year interest rate, right? So they're providing constant support there for the pound yen, euro yen, and dollar yen on dips. So looking for that pullback potentially. 117.15 was the level. Now, this is not the first time I've seen this chart too. 25.20 I've seen and floated around a lot, looking for a decent pullback in US stocks. But, you know, like I said, that's proved very, very hard to do. We spent a fair bit of time on that, guys. Welcome to the bond trading lesson. What's been going on here since? So it's getting serious here for the euro. You're probably going to see some critical price action in the next couple of hours now. And what happens here really will dictate maybe what happens for the rest of the week, if we do get follow through selling in the euro. In terms of data this week, what you want to be looking out for, apart from the New Zealand interest rate, there's a key speech on Wednesday from Yellen on inflation. And on Friday there's a dual speech from Draghi and Carney at the same event. Those seem pretty interesting. And there's some US data on Friday that can be seen by the Fed as important. So that's the core PCE price index. Now that previously caused some market movement, so let's see how that comes out. Other than that, I'll be back tomorrow about the same time. We'll see how this US dollar's fared. We'll see if it's broken some of those levels that we're looking at on the dollar index here and the euro to the downside. We'll see how dollar yen's reacting to the snap election. It's probably going to get a lot of support in the Japanese session just generally, and so that's where I'm going to be looking at it. And then we'll see if US yields can rally and what the stock market does if Trump can't pass healthcare. Those seem to be the main things to be watching. Alright guys, best of luck with your trades. If you want me to look at specific pairs during the next week, just send me a little PM and we can spend some time on it. Nearly every pair is interesting right now. That pair that we were trading last week that was pretty crazy was the Euro Aussie, and have a look at it now. Jeez. Yeah, you're being bullish. Now you're bearish. Oh, you're very bullish. Have to be very bullish. Oh, now we're very bearish again. So it's it's wild. It's wild, and this is happening very, on the whim. That rally there was not that justifiable, and now the sell-off here is mainly euro-driven. This one makes a little bit of sense, but you'd be a brave person to sell into that rally, right? So it is a tricky one to play right now, that's for sure. We'll see how it plays and it gets down to this underneath 149 towards 148. But yeah, the Aussie's like in the eye of the storm, right? People aren't focused on it, they're focused on other pairs. That's why it's getting a little bit of left alone in the last 2 days. Alright guys, best of luck with your trades, be safe. I'll post a trade idea later if I see a better level for dollar yen, but I don't mind buying up here. It's just, not the best risk reward. There's a few things that can go wrong, namely US stocks later, or pound yen and euro yen.